Ladies and gentlemen, good day and welcome to E2E Networks Limited Q4 and FY26 earning conference call. As a reminder, all participant line will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Rashi Khatri from Go India Advisor. Thank you, and over to you, Rashi.
Thank you, and good afternoon, everyone, and welcome to the Q4 and FY26 earnings call of E2E Networks Limited. We have on the call Mr. Tarun Dua, Managing Director of E2E Networks, and Mr. Nitin Jain, CFO of E2E Networks. We must remind you that the discussion in today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company may face. I will now request Mr. Tarun to take us through the financial and business updates, subsequent to which we can open the floor for Q&A. Thank you, and over to you, sir.
Yeah. Hi, everyone. Hi to all our team members, all our investors, and we hope that you have had like a good last financial year. And so I'll do a brief coverage of like all the progress we have made during the last quarter and last year, and then I will hand it over to Nitin to talk about the financial highlights of this quarter and the overall year, and then we'll open the floor for questions. So in this year, like we have like a lot of milestones as a company that and as a team that we have achieved. So like we have been able to use our Seed platform for large scale GPU clusters, and we have helped like LLM teams like operate like training on large clusters over the Seed platform. So with this, like we have demonstrated a full stack capability of operating both bare metal and container based large scale deployments for Nvidia powered GPU infrastructure at a bigger scale. And we have like not only demonstrated that like we have the ability to operate the infrastructure, but also successfully monetize the infrastructure at a much larger scale than we had proven like last year. And this is a testament to the strengthening of our technology and talent, which has been used to build like very deep in-house capability across the entire 5 layers of the stack. And we have done like major software improvements to improve the reliability, performance, and scalability of our GPU infrastructure in the last many quarters. And going forward, like we feel that like we have been saying this a lot, that like look, the future is all AI. This is like a decadal story. Now, given how the market all across the world are reacting to the AI infrastructure usage being increased like very, very drastically. So I think like we have been validated in kind of like putting up like speculative GPU infrastructure. So where the world is divided between haves and have-nots, we are the haves in terms of like having access to speculative GPU capacity, where like capacity is running out everywhere. So that allows us to kind of like continue our growth. So with regard to like where we see like medium term and long term kind of like growing in terms of like the world shifting to GPUs from the CPUs, from rule-driven software to AI-driven software. So we continue to explore like how we can build more infrastructure under our management. So where we have explored equity, where we have explored debt, now we are also exploring like a variety of private credit asset-light models to kind of like bring in rapid expansion to our GPU capabilities. So we have consistently met the industry benchmarks for performance for like inference or training or GPU deployment under our management. And we expect our cluster 1, B200 1024, to go live like somewhere in the mid-May. And in a couple of months, we are expecting to kind of like be able to deploy another cluster of 1024, which has already been planned. And then we are very strongly positioned to capture significant offtake in the Blackwell generation of GPUs, apart from continuing to run very, very strong on the Hopper generation. Apart from this, like, we continue to build a plan around like B300, GB300, and Vera Rubin deployment. And we will continue to keep increasing the GPUs under our management and under our direct deployment, both through partnerships, through direct acquisition, and by exploring like various financing models that can help us secure more GPUs. So we continue to focus on that. We continue to focus on our end-to-end project management capabilities to deliver AI infrastructure to AI services and AI product companies, AI digital natives, enterprises in the BFSI and other sectors. So we'll continue to work towards that. So, okay. So I think like that pretty much covers it. So this has been a good year and a good quarter. So pretty much like our strategy has been validated over last many quarters. So where we significantly continue to add to our technology heft in terms of like having deep tech talent in-house to be able to do stuff. So we gave a certain guidance in terms of like where we would be by the end of this quarter, like a couple of quarters back. I think like we have more or less like met and exceeded that target, and we hope to continue to do better in the future. So given that the market is growing very, very positively, and it's a broad trend, like there can be, again, like we have mentioned in the past, that there are crests and troughs, but ultimately this is a market where the GPU utilization is going up, the demand for tokens is through the roof. Like, so India being a country of more than like a billion people on phones, like, and of course, even if they were not on the phone, like there is like a inherent ability to treat every possible piece of information that is going in and out of people, in and out of machines, in and out of enterprise systems, to be described in the form of tokens. So tokens can be representing voice, text, any other form of data, whether in visible spectrum, invisible spectrum, audible voice, inaudible sound waves, ultrasound, or whatever. So like everything is tokenized data for AI. And I think like India as a country generates like a lot of data. So we continue to believe very, very strongly in the long-term India story of AI factories being built here and India becoming the AI factory of the world. Now, with that, I would like to kind of like hand over for more numbers-driven financial highlights talk to Nitin, and then we'll open it up for question and answer. Nitin, over to you.
Thank you, Tarun. Good evening, everyone. Thank you for joining us today. I will walk you through our financial performance for the first quarter and full year FY26. Q4 FY26 again witnessed a good quarter for E2E Networks. We have demonstrated our ability to scale AI infrastructure rapidly, achieve high utilization across GPU cluster, and convert capacity into strong revenue growth. Most importantly, we have been able to drive our EBITDA margin in Q4. So let me start with the quarterly highlights for the Q4. Revenue stood at 956 million, which is up 186% year-on-year and 37% quarter-on-quarter. EBITDA stood at 581 million, with EBITDA margin expanding up to 60.7%. Profit before tax turned positive at 86 million compared to a loss of 75 million in Q3. PAT stands at 64 million. This performance reflects 120 million swing in profitability sequentially, driven by operating leverage and a strong execution. EBITDA margin expanded by 413 basis points sequentially. At the same time, depreciation increased to 513 million in Q4, reflecting ongoing infrastructure investments. Despite this, we achieved positive EBIT and positive PBT. For the full year FY 2026, revenue stands at 2,456 million, which is up 50% year-on-year. EBITDA crossed 1,263 million, which is up 30.6%. However, we reported a PAT loss of 156 million, which is driven entirely by the depreciation on our GPU infrastructure investment. Our core business remains strongly cash positive, operationally profitable at EBITDA level. As utilization continues to ramp up, revenue will progressively outpace depreciation, improving reported profitability. To conclude, Q4 demonstrates our infrastructure investments are translating into revenue, and we are firmly on a path for growth. Thank you for your time. Now I would open the floor for the questions.
Thank you, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Our first question comes from the line of Bhavya Gandhi from Bajaj Alternate Investment Management Limited. Please go ahead.
Yeah, hi. Thanks for the opportunity. So first question is regarding the asset-light model that we are looking out for with L&T. Could you throw some light? How will the asset-light partnership fructify? What sort of arrangement we have?
First of all, of course, we have a MOU with L&T to monetize the GPU infrastructure that they are building. So now that is still in exploratory stage. So as the GPUs get deployed and we start the work into monetization, as we know more and more, we will talk more and more about that. That being said, that this is not an exclusive arrangement. So we will continue to operate at an arm's length with L&T, and we will continue to explore other partnerships of similar or different nature as well. So there is a long gap between say pure debt versus pure equity. So there are number of structured possibilities in terms of figuring out that how to finance the GPU in partnership with a lot of different types of partners with differing objectives. And we'll continue to explore all those partnerships. And as and when we reach a conclusion on any particular partnership, we'll obviously keep everyone informed.
Sure, but will it be margin accretive, or because the capex is going to be on other partners?
It's too early to say, Bhavya, how would the numbers look like. So obviously, it's very, very early to say how those things would look like.
Okay.
So unless the structure is finalized, these would see, obviously we all work for a profit, so we'll not do anything which doesn't earn us the profit. So that being said, so how to put numbers to that is not something we can do today.
Got it, sir. And on the MRR, would you like to guide for the next year, because you've been doing this capex from your own pocket also this year? So if you can.
Yeah, so we'll continue to focus on growth, just the same as rest of the market is doing. We want to be very, very growth focused. So that being said, that I think it would not do justice to do a MRR guidance for 1 year in the future. I think the future is changing very, very rapidly week on week. So it was obviously impossible to give a week on week guidance on MRR. And it would be better to watch it quarter on quarter than predicting 4 quarters in advance.
If you can just throw some light on the asset turn for the capex that we are doing, at least some sort of understanding we can get in terms of capex.
I think we want to get the framing away from things like asset turns. So essentially, don't look at us as a asset monetization business. Look at us as a technology business. So I think there was a recent conversation around the tokens becoming more valuable. So same set of tokens that were being generated by, say, open source AI or closed source AI, like what used to produce, like, say, X amount of value, uh, we are increasingly seeing that, like, as the accuracy, efficiency, capabilities of AI increases, then the generated tokens also become more valuable for businesses who have figured out how to utilize those tokens in their business. So, which means that, like, kind of like setting up ourselves for looking at the value of our outcomes based on the size of our assets doesn't do justice to the business. So ultimately, we want to get away from saying that, okay, this infrastructure produces only X amount of value. So we will continue to explore options for how to produce more value from the same infrastructure by figuring out, like, where the tokens are more valuable.
Got it. Fair enough. Okay, sir. That's it from my end. I'll get back in the queue. Thank you so much.
Thanks, Vivek.
Thank you. Our next question comes from the line of Keshav from Nivashay. Please go ahead.
Yeah.
Yeah.
Thanks for
Hi,
the opportunity and congrats. Yeah. Thanks. So thanks for the opportunity and congrats on the great set of numbers. So sir, like we
Thank you.
procured the black. Yeah. Hi sir, am I audible?
Yes, please go ahead.
Hello. Yeah. So sir, like we procured the blasters like way back in the early quarter and they are still not live. So what's the reason behind the delay? Are we facing some kind of procurement issues or something from the
The
Nvidia or
global supply chains have been impacted somewhat, so it's always like the delays are always like for want of a horseshoe nail. So, kind of like we have been working very diligently towards like making sure that like everything is planned out and everything gets delivered on time. But then, you can't control every single component, and sometimes like some components can be the most critical ones from the point of view of like getting the entire deployment done. So we are targeting like the first deployment to go live before mid of May. So keeping our fingers crossed over there.
got it, sir? And so like this quarter like GPU demand has been strong globally and people seeing that all the GPUs are sold out, including the old ones. So how are we seeing this trend in the domestic market? So are we also experiencing the same or is it different situation in India?
Okay, I don't think I have understood your question, but let me try to answer what I have understood. So, like, see, obviously, it has turned into a much better market than it was like a couple of quarters back, especially for like people who have the GPU infrastructure in place. That being said, that as a company, as an Indian company, we are very, very focused on India first. So wherever we get an opportunity to support Indian companies, we definitely like to do that. Now, with that in mind, like basically like we always prioritize India first, and then we are also happy to support the global infrastructure needs today. I hope the answer is in the right direction towards what you were asking.
Yes. So, sir, just definitely, like, I was just trying to ask, like, demand has been strong globally, that the GPUs got sold out.
Yeah.
I was
So
just trying to
there
understand, like,
is fresh. We are seeing like demand both India as well as globally. It is strong both ways, and we definitely try to prioritize India. But then like wherever the demand comes from, eventually like we are happy to fulfill it.
got it. And one last question from my side, that employee cost increased, this quarter. So if you could give some color on that, like, what's the key drivers behind this price?
See, as we grow, like we kind of like start figuring out like more and more interesting problems that need to be solved in this space. Obviously, our goal is to go towards what you call higher value tokens, and that obviously requires the application of quite a high level of talent. So, as we obviously grow, the base effect would still be there. So, but on the other hand, like we want to maintain a balance of not losing out on future opportunities, because we didn't invest today on what was required 12 months later or 18 months later or 2 years later.
Got it. And one last thing, like, if you could also provide the GPU utilization levels rate, if possible, like, for this quarter.
See, broadly, like, across our entire infrastructure, not just GPUs, I think we are looking at, like, 80% plus utilization. Uh, So certainly, across the quarter, now, I would say, like, only in the March month, we are looking at, like, 80% plus kind of utilization, certainly less than 85%. So there is like elasticity in terms of like basically like how we can increase the utilization further over there.
Got it. So I will get back into this. Thank you so much, and contacting for the
Sure.
next set.
Thanks, Kishore.
Thank you. Our next question comes from the line of Bharat Gulati from Dalal and Broacha. Please go ahead.
Yeah. Hi.
Yeah. Hi,
Thank you
hi,
for the
Bharat.
opportunity. Hi, sir. Hi. Just wanted to get a breakup of what is our MRR breakup currently? Can you give a split between India AI Mission, Enterprise, and also a split between what would the GPU contribution of that MRR be as compared to CPU? Yeah.
See, I think like broadly the way things are progressing, like in another couple of quarters, I think GPU contribution would exceed would be closer to 85-90% over coming quarters. That being said, like all these numbers are fairly dynamic. So in the sense that like they vary very, very rapidly from a week to another week. So I wouldn't like to kind of like and the sample size today is fairly small. So like what's the split is something that like we don't want to worry about today. So like as we grow the cluster sizes to a much larger number, then it would start making sense to kind of like talk about like, okay, Hoppers, you've got a couple of thousand of them. Then Blackwells, you've got a couple of thousand of them. That's the point at which like it would start making sense to say, okay, what's happening on Hoppers, what's happening on Blackwells. Today, the entire universe of GPU, CPU, storage, all of that stuff that we have is like fairly small to kind of like put a very, very strong split around those numbers today.
Fair enough, sir. But could you just give a MRR split between the India AI Mission and our enterprise or our SME clients? Just trying to get an idea of what kind of visibility do we have in that 374 million MRR. And also just to add on to that, before that, our MRR for the previous 2 months, if we average it, would come to like a 290 million kind of MRR. So just trying to understand that spike that came in the last month. What was the reason for that spike? And also how sustainable is this 374 million of MRR?
It's broadly an increase in overall utilization that has led to the increase in the spike in the March month. From the perspective of overall split, like I think like the India AI kind of like yeah. So basically, like the overall government business, like across this quarter, has not exceeded more than like say 35-40%.
All right. So, is there some particular reason for that? Because ideally, our India mission was supposed to start in the month of Jan. We are in March as of this quarter's reported numbers. So, what kind of ramp up are we seeing in that? And just any kind of timelines and what kind of revenues in terms of MRRs do we expect from that?
The way we have always looked at India AI mission is that like, look, we are trying to obviously, like we said, that we are supporting India, we are supporting India AI mission, we are supporting Indian companies, and we definitely give a preference to all those workloads. But that being said, like, so whatever capacity is not off-taken, so we are not trying to kind of like force anyone to off-take any capacity from us. So we are very, very happy to sell it to outside the scope of either the AI mission or the government workloads. So we have enough customers across multiple segments to kind of like solely rely on one revenue driver growth. But that being said, like we continue to work very closely with the AI mission for the coming generations of GPUs as well. And we are hopeful that like we will continue to collaborate, continue to work together, continue to solve problems.
Just trying to understand that India AI mission was almost all our Hopper and Hopper series GPUs were given to India AI mission. We're seeing 80% utilization, but India
No,
AI mission contributes
we have
40.
not scaled up, that to that extent. So majorly, like, whatever was the scale required by the allottees of AI mission, we have provided that scale, but, like, we have not insisted on them having to increase their scale without, like, having the need for that. So we are quite okay with that.
So in terms of our revenue currently, what kind of clients are we currently catering to, and what's the pipeline? You said mid-May we expect Blackwell to get deployed. Do we have some
Again,
firm orders?
this is a very, very small base. Like, so it's like, kind of like, okay, there are GPU customers like everywhere in the world. There are GPU customers in India, there are GPU customers outside India. Like, every possible segment that you can think of, like whether it is enterprise, whether it is BFSI, whether it is education, everyone needs GPUs. So it's practically like, basically like almost first come, first served today. So, like, the nature and profile and putting like a stat on, like, okay, this much of our business comes from here, this much of our business comes from there, is like kind of like very, very premature. I think, like, we need to grow the base of GPUs to a couple of tens of thousands before these numbers start to make sense. So today, at a very, very small base, like, none of these numbers would make sense to kind of like track and then kind of like say that, okay, what's the kind of number this quarter? It will change next quarter.
So would it be fair to say that until we don't build a huge base of GPUs, our MRRs will be lumpy in nature? Is that what you're trying to iterate at?
No, I think the demand has secularly changed in the GPU world. So, like, from the era in which, like, the lumpiness was there because our base was even smaller, I think we have come a long way over there. That being said, the lumpiness will continue to decrease as we continue to build more and more volume of GPUs under our management.
So out of the 374 million, what exactly would be long-term MRRs that at least we are seeing the visibility for the next 8 to 10 months or a year or so?
See, we are not very, very focused on. So we have a balance of, like, basically like thinking about like, okay, what needs to be like 6 months, 1 year, month on month, which is preemptible. So we are doing like kind of like a whole series of them. So, like, it's a week on week effort to kind of like figure out that, okay, what is the capacity you want to sell hourly? What is the capacity you want to sell weekly preemptible? What is the capacity you want to sell monthly? What is the capacity you want to sell yearly? That being said, like, wherever larger clusters are involved, we try to do at least like 6 months to 1 year visibility with our customers. And increasingly for even larger customers, we are trying to look at even longer visibility to at least like 2 years to even going up to 3 years. But that being said, like, our view is that, like, as tokens become more expensive to generate and kind of like they generate more value for people, it is better to kind of like not put all the eggs in the long-term basket, but have like a judicious mix in very short-term contracts and medium-term contracts and some degree of long-term contracts.
Got it, sir. Got it. And just one last thing, sir. In terms of the Blackwell that we expect to get deployed in May, can you give any idea in terms of who will be the customer? Will it be an enterprise, India mission, and SME? And when would that customer's revenue start to come in? Will it come in from May, or will there be a lag?
We will announce that after closing that particular deal instead of like saying anything speculative today.
Fair enough, sir. Fair enough. Thank you. That's it from my side, sir.
Thank you. Our next question comes from the line of Nishant Joshi from Equisense Advisors Private Limited. Please go ahead.
Yeah, hi, Nishant.
Good evening. Sir, I have one question. As you said, company is building up their assets using.
I'm sorry to interrupt you, Mr. Joshi, but your voice is not audible.
Sorry, am I audible now?
Yes, please proceed.
Sir, I want to say that as company is planning to build assets using debt as well as equity and subsequently intend to go for the asset-light model also. So will this change our business model? Means instead of providing hardware, we would be providing more of service. We'll be offering our TIR platforms. So will this lead to change in our revenue model?
Think of this as an expansion of the number of business models without shutting down any of the existing business models. So we will continue to own, continue to operate GPUs. We will continue to acquire new GPUs. We will continue to expand the partnerships to kind of like bring increasing number of GPUs under our management available through our T-Stack platform, which operates at multiple layers, where it is the choice of the customer, like what layers they want to buy. Kind of like nothing is like changing from the point of view that, okay, we are not going to do this or we are not going to do that. We are simply saying that like we are going to do additional number of things to expand the universe of our thinking to do a lot more than what we are doing today.
So, sir, it could be an ideally additional line of revenue, you mean to say?
Absolutely.
When we move.
Absolutely.
Okay. That was my query, sir. Thank you. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address all the questions from the participant, we request you to kindly limit your question to 2 questions per participant. If you have a follow-up question, please rejoin the queue. Our next question comes from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, I'm audible, sir.
Yes, you are.
Oh, okay. Thank you very much, sir, for this opportunity. So just wanted to understand now, at a March MRR of 37.4 crores, so what is our capacity utilization, and on what capacity?
So this is closer to overall capacity utilization of around 80% in the March month.
And on a capacity base of 3,900?
Yeah. So this is like CPU, GPU, storage, all capacities put together. So the utilization is closer to 80%.
Closer to 80%.
Yes.
And I think we have around 2,050 lined up in next 6 to 12 months.
2,048
right?
plus some shares that we are planning to deploy in this financial year. Starting from May, where the first lot of 1024 is expected to go live.
So by FY27 end, we would be targeting around 6,000 of capacity?
I wouldn't want to place a limiting number over there, but you could say that like that's the minimum number.
At least that. Okay, understood.
Yes, that's what is already visible. So that's what we've already spoken about. So yeah.
Understood. And you mentioned around 80-85% utilization by March. I mean, you're talking about by March 27 of this expanded capacity? I mean, how?
No. This is the previous gone by March.
Achha. Previous March only. Okay, understood. And my second question is on your fixed asset. We have got around 1,500 crores out of it fixed asset, right? And last 2 years, capex has been around close to that only. I mean, so this entire is a depreciable asset. I mean, would that be a fair assumption?
I would let Nitin put a perspective on that.
Yeah. So the entire fixed block is the depreciable asset, which constitute of the new V200, which is currently displayed as CWIP.
Correct. And what is the amortization schedule for this? I mean, is it 3 to 4 years? 6 years. 6 years. Okay.
Yeah.
Okay, understood. And what would be FY27 capex target?
So, like we said, we are already planning to deploy 2048 B200. So that is already in place as far as our known plans are concerned. That being said, that we are not limiting ourselves to those plans. So we continue to deploy capital under various business models judiciously to expand the GPU footprint fairly rapidly.
Correct. So any number you have? I mean, I think FY26 was close to
a look back is more important than putting a number in today.
Okay. Understood. That would be it from my side. I wish you all the best. Thank you.
Thank you.
Thank you. Our next question comes from the line of Varun Gandhi from Fin Avenue Growth Fund. Please go ahead.
Hi, Tarun.
Hi, Varun.
My question is on GPU rental prices, and are we seeing pressure on them? And I ask this from two aspects. The first aspect is the technology is advancing rapidly. So we see the Rubin architecture has been disclosed by Nvidia, and which is much more cost efficient for inference compared to your even your Blackwell architecture. And number two is the competition that's been ramping up across domestic competitors, right? So are we witnessing any sort of pressure on GPU rentals right now, or do you foresee that in the near term?
See, I think like broadly the trend today is that like there are not enough GPUs in the world that people want to buy and deploy. So that's the current trend. Now, whether this trend remains like for how long, like is hard to predict. But the broad secular trend has been there that like basically there are AI believers and there were AI non-believers. I think like the proportion of non-believers is like slowly dwindling, and it's quite clear that like basically so we are barely scratching the surface in terms of utilization of AI. Like we have looked at so many of our customers, so many of the organizations we work with, including our very own. So where we say that, okay, uh, uh, is it the case that like our AI utilization is to an extent that we want it today? The answer for ourselves that we increasingly get is, no, this is going to be like more like 10x, 20x, 50x of where we are today in terms of how we are utilizing AI. So AI is not coming out of the IT budget. AI is essentially coming out of your budget for the capabilities that you're building for the business. So that being said, that I don't think like the demand environment in the foreseeable future is going to be changing negatively for long periods of time. I don't think that's going to be the case from the visibility we have today. So like we don't see that there is like any negative pressure on the pricing today. So in fact, like there are like I think good set of tailwinds which are slowly inching up the prices rather than like a decrease in pricing.
Got you. So from a demand standpoint, we aren't seeing any sort of negative. But from a technology advancement standpoint, let's say if the Rubin architecture comes in live in this year, and it should, would that pressure?
Like, there is a lot of workloads that will go into production where they will continue to operate on the targeted architecture. So typically it's like a what you call like a funnel kind of a growth where the next layer of the funnel is bigger than the previous layer of the funnel. So which means that like the demand for existing GPUs will continue to remain very, very strong. So demand for even the Ampere series has remained strong. Hopper series has remained strong. So like
Tarun, I understand the demand has remained strong, but let's say 2 years ago, the GPU rental prices for Hopper H200s, are they same today or they are lower, 30-40% lower than what they were quoting at 2 years ago?
See, I think like taking the case of 2 years ago is slightly anomalous from the point of view that I think that was one particular year in which the GPU demand went from say 1 to 10. So like I think like that capability driven shortages where the capability to print that many GPUs was had to be built very rapidly. So that created like I think like a local maxima of pricing. But broadly, we are seeing that there is stability in the pricing for GPUs over an extended periods of time. Typically, we feel that like it is possible to kind of like definitely use and utilize the GPUs over a 7-8 year period. So we don't think that like the GPUs are like a 2 year story or a 3 year story, and then kind of like there is something available at a much lower cost and you are able to shift, and those shifting costs are like very reasonable. So that's not the case. So
Understood.
like your entire test debug cycle for doing AI on a new chipset is like a whole other set of expenses that you don't want to do, like if your job is getting done by a GPU
Understood.
which is available at a very reasonable price.
Got you. Now, my second question is, at the beginning of the call, you touched upon how you've significantly improved your software architecture. Could you just give me a brief, if you could just highlight a brief example of how you've done that? You iterated that you're now trying to capture high-value tokens. Is there some sort of example that you could showcase?
So this is broadly from the point of view is that like the tokens themselves today are more valuable. It's just a point of like choosing the right set of tokens that people are going to utilize. So it's not like a kind of like a strategy statement to go and capture one particular set of high value tokens today. It's a broad futuristic outlook that like, look, ultimately we have to go and figure out like which are the high value tokens. Now that being said, like from a platform improvement perspective, like we have been working on things like which are required by people running training on larger clusters, people who are running inference, how to support them, people who want to build rapidly the pipelines reliably across larger number of GPUs, and understanding of like what is it that the AI data scientists do from a been there, done that perspective. So we have made improvements in all those areas for productization of our C stack.
Right. So just as an extension to this question, see, we're very well positioned to capture the sovereign AI tailwind. And my understanding is that BFSI companies would be a key client base over there. Is there any sort of strategic development that you could share where you're partnering with some sort of SaaS companies or other software companies and trying to offer a bundle of software plus compute? Is there something you could help us with?
Yeah, so as we do something, like we'll definitely share that with everyone over here. So, like as things happen, like we'll do a look back and say that okay, this is what we've done.
Okay, but there's nothing that you can share in terms of your thought process over here.
See, like we continue to drown in opportunity. So what we capitalize on, we will come and inform the market.
All right. Thank you very much.
Yeah, thank you.
Thank you. Ladies and gentlemen, a reminder to all the participants, in order to ensure that the management will be able to address all the questions from the participant, we request you to kindly limit your question to 2 questions per participant only. If you have a follow-up question, please rejoin the queue again. Our next question comes from the line of Abhishek from InCred Equities. Please go ahead.
Yeah, hi, Abhishek.
Hi, sir. Thanks for the opportunity and congrats on a great set of numbers. So
Thank
my
you.
first question is about, the guidance commentary. If we summarize your comments on the demand, it appears to be really strong. We have a visibility of 2048 GPUs, and then we said that, we don't want to get fixated on the guidance. So just trying to understand that the purpose here was not to get fixated on the number rather than any worries in your mind about the current macro. Is the understanding right?
Yeah, we are not worried about like whatever numbers we give, whether we will be able to meet them or not. I think it's like we don't want to give a underwhelming number without first exploring like over week after week, over like 52 weeks, like what we are capable of doing. So it will become sort of like a limiter for us ourselves to say that, okay, we are only to meet this number. So that's why we are not putting a number today.
Perfect. That's very helpful, sir. The second question is on the pricing. So contrary, to the prior question, the recent articles are suggesting that the GPU spot rates for April have gone up substantially higher. So for an H100, the prices are up anywhere by 25 to 30%. Can you just...
We are seeing that. We are looking at that. That being said, like we obviously like we try to capture some of that, but then that being said, like we are also trying to support the Indian companies and India as a country. So where we want to have a balance between long term and short term. So short term, of course, like we want to make more money, and long term, of course, we want to work with the kind of customers who will sustain and grow on our infrastructure over a long period of time.
Perfect. So just last one data point from Nitin, sir. So, the depreciation for the next quarter should be up by around, 25 crores a quarter, right? Is that assumption right?
I'll let Nitin answer the questions around the depreciation. Nitin, over to you.
Sorry, could you repeat again?
Sir, the depreciation for the next quarter should go up incrementally by 25 crores a quarter. Is the assumption right, sir?
So why do you expect that? Because
of the B200 cluster?
B200 cluster would be that we are saying the timeline of mid-May. So that's what there would be an increase in that depreciation, but not to that significant effect. That's what you are telling us.
Okay, perfect, sir. That is very helpful. Thank you for taking my question, and best wishes for the next year.
Thank you, Abhishek.
Thank you. Our next question comes from the line of Neil Munot from Pico Capital. Please go ahead.
Hi, sir.
Yeah, hi, Neil ji. Hanji.
Hi. Also, thank you for the opportunity. So my first question is building on this participant's question. The capacity utilization is...
I'm sorry to interrupt you, Neil, but your voice is breaking.
Is it better now?
Yes, please proceed.
Yeah. So, the first question is basically building on participant's question. Is that the 80% utilization that we're talking about, I'm assuming this is excluding the new B200s that are...
Yes, that is excluding the B200, obviously.
Yeah. So, when we talk about the 80% utilization, with respect to the remaining capacity available, have we kept these aside for POCs or demand is still ramping up in that sense?
No, so the demand is still ramping up over there. So, it's like all sorts of different sorts of capacity. So, like, they all work in different combinations. So, an ideal utilization number could be like kind of like it depends on like basically like where do you end up. But that's not a limiting factor on the MRR from a very straight line perspective. So, for instance, like the same particular piece of hardware could, like under different circumstances, be billed at like wildly varying rates.
So, what is my assumption?
See, these are all averages, like essentially. So these are all important from a look back perspective. So this is our assumption on that, like, look, we are like doing what is like sort of like an 80% capability. Now 80 could be 80 could be maybe 85, 80 could be even 75, maybe even 70.
Okay, understood. And so with respect to the demand scenario in B200, have we closed India mission?
We have not closed any deals on the Blackwell capacity, which is going up as yet. Like, obviously, once we close the deal, we will kind of like inform everyone over here.
So the reason for this is the reason ramp up, or is the reason that we're still closing POCs, or in that sense?
So there is a lot of interest in the Blackwell capacity that we are building. So kind of like we are working towards with multiple customers to figure out like what sort of problems they need us to solve for them and what is it that they are looking at from us. And we obviously want to work with the customers that are best placed to utilize what we have to offer.
And sir,
Neil, please rejoin the queue if you have a more question. Thank you.
Okay, I'll follow up.
Thank you. Next question comes from the line of Hardik Gandhi from HPMG Share and Securities. Please go ahead.
Hello. Hi, sir. Thank you for the opportunity.
Hi, Hardik.
Congratulations on a set of good numbers.
Thank you, Hardik.
Just wanted to push on a question asked by the previous participant. I think so majority of the investor group just wants to know whether the revenue uptick is due to any lumpy nature, or are you seeing any sustainable growth in the long run? Because in the last December and March, we suddenly dropped. But we suddenly dropped the numbers. We stated that the startups were no longer wanting our ecosystem, right? So we just want to know from a long-term perspective, or at least from a.
So let me try to answer that question as best as possible. So see, like the lumpiness is a part of the nature of the business. So the lumpiness will keep going down as we keep increasing our GPU base. Now, that being said, like we are currently seeing the kind of customers who are buying these GPUs have sustainable long-term workloads. So these are not of the short-term nature for most part. So we do expect to have sustainability for these workloads over the medium term. So I don't think like there is going to be a massive amount of lumpiness in the near term. Medium term, of course, like as the number of GPUs grows, like I think the effect of lumpiness would be far more muted than it has shown up in the past, in the early days of us building the capacity.
Right. And the second question from my side was to understand again on this part itself, that what percentage of revenue are we allocating to a long-term long-term contracts, so that our MRR
it's of a dynamic nature. So like basically like it is not like possible to predict.
We are not predicting. I'm just saying that from a
so we are not setting any hard lines over there. See, we are not setting any hard lines over there. Like there are, I think, like far more number of variables to consider than it would be possible to describe over here. That like what to pick up when in terms of like customer interest. So I don't think it would be like I would be able to give like a very fair fixed answer to that question. So like we are definitely interested in having some percentage of long-term contracts. What that percentage will come out to be is like something we need to look at and on a look back basis when the size and scale of the GPU installation is sufficient. So I think in the short term there is no clear cut answer to that.
Right. Just a small data point again. What percentage of revenue did come from customers outside India versus domestic demand for the last quarter?
I'll let Nitin take a stab at this question.
So the international revenue for the last quarter is roughly around 35 odd percent, 35 to 37% is the international customer revenue.
Okay. Yeah. Thank you. That's really helpful. Appreciate the time.
Thank you. Our next question comes from the line of Srinivasu K from Trust Investment Advisors Private Limited. Please go ahead.
Yeah. Hi, Srinivasu.
Hi, sir. Am I audible?
Yes, loud and clear.
Yeah. So, sir, what percentage of Q4 revenue came from inference workloads versus training? And what would be the future split up of this mix, at least directionally, sir?
So I think like there is a lot of confusion about like what consists like of inference revenue versus training revenue. I think these are not like super hard lines. Sometimes the same set of GPUs are used by the customers for kind of like bursting up the inference workloads when the inference workloads are high, and at a time when the inference workloads are low, they get converted to training. So the workload management is far more flexible today to kind of like point to like, okay, what percentage of inference, what percentage of training today. And I think again, like at a much larger scale, like these numbers would become clearer. So today, of course, like it's hardly possible to kind of like super differentiate between, okay, who is using that 1 GPU, 4 GPU, 8 GPU, 16 GPU cluster, either for training or for inference. But that being said, like majority of revenue is still like closer to training than to inference.
Okay, sir. And You said 6,000 GPUs by FY27 at least minimum, right? So what would be the upside, sir? Could you deploy 8,000 on upside, 8,000 to 10,000?
I don't want to put any numbers right now. So, let's look at those numbers as I look back, over uh, coming period of time. So rather than putting out a number today.
Okay. Thank you and best of luck.
Yeah. Thank you, Shailesh.
Thank you. Our next question comes from the line of Rohan Nagpal from Helios Capital Management. Please go ahead.
Yeah. Hi, Rohan.
Thanks for the opportunity. Hi, thanks for the opportunity and congrats on a good set of results. My first question was, so you said that there's a variety in terms of your current MRR being short-term, medium-term, slightly long-term. Could you provide some directional commentary on how much of that MRR is 6 months plus or 1 year plus?
So I think one is we are still on a very small base of GPUs. So we are not doing any hard split in terms of where we want to be or where we are today. And it's fairly dynamic and rapidly changing, both with new capacity coming up online. So all these numbers are subject to very rapid and very wide amount of change. So these do not add to any understanding for anyone today.
I mean, if there is a 20%-25% increase in the spot price, then capacity that is contracted out for 6 months or 1 year will not be in a position to take advantage of any increase in realization, right? So I think it would be somewhat beneficial for someone looking at it from the outside to get a sense of some amount of revenue uplift or exposure to increased realizations.
So that's a very granular set of understanding that you are seeking on a very small size of the infrastructure installation base compared to the global peers. So I think we would like to avoid this conversation for today. And as we grow in size, then we talk more about that. Okay, now these numbers actually mean something and they are making sense to someone on the street. So today these numbers would not make much sense.
Okay, sure. Thanks for that. And then the second question was, so you talked about higher value tokens. So could you provide some color on which industries are sort of taking advantage of higher value tokens from your vantage point?
Not really. I think it's more closer home than that in terms of okay, what's the higher value token? So asking a question what is closer to a search query is a reasonably low value token. Someone using the tokens to solve a problem that is paying the bills for a company is a completely different value conception for those tokens. So answering a basic transactional support query is a reasonably low value token. Being able to answer a more complicated query or being able to confirm a more complicated transaction with a customer on call is a higher value token. So there are infinite number of variations of how people use AI. And the key is to find those customers who are utilizing the higher value tokens where they are not worried about okay, what's my ultimate per hour GPU price, but what's the cost of my solving a particular problem and generating a higher ROI. So again, we are not directly involved all the time in the identification of higher value tokens and being able to strategize in a very, very static manner that, oh, they should go and sell to this customer, they'll probably pay higher for this particular GPU. It's a broad industry trend where we are seeing increasingly the demand coming from customers who are not price sensitive because of their ability to generate or consume higher value tokens through a combination of their own software or proprietary or open source software that is available extant in the market today.
So in that case, what is E2E's role in this high-value tokenization? I mean, that would just be an outcome of if the person who is renting a GPU or taking on GPU capacity is able to extract higher value, they'll be willing to pay more, right? So the price discovery should just take care of who is generating higher value tokens. I wasn't too clear on how E2E is sort of working towards higher
See
value.
how you are able to
tokenization.
quickly get to that point of being able to generate and utilize those tokens for your business. Like, so it's a fundamentally how to build on various parts of the software and hardware stack to make it available quicker. I think that's where the role is played by E2E.
Understood. Okay. Fair enough. That's it from my side. Thank you very much.
Okay, thank you.
Thank you. Ladies and gentlemen, due to the time constraint, that was the last question for today. I would like to hand the conference over to the management for the closing remarks. Over to you, team.
Yeah. Thank you to all our investors, all our team members, all our customers, all our ecosystem partners for all the support you have all extended to E2E Networks over last many years. It's been a overwhelming amount of love for us that we are seeing in the community and overall community. And we wish you all like a great day ahead. And thank you for patiently listening to our call. And we would like to kind of like once more thank everyone and end this call.
Thank you.
Thank you, sir. Ladies and gentlemen, on behalf of E2E Networks Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.